Hello and welcome to FountainFX on Monday the 8th of September 2014. We're looking at the Euro US dollar at the end of the day, just to surmise as to what's been happening in this marketplace. Now this line here, up here, this is a trade that I took earlier on in the day. I waited for the US Open around about 2:30 in the afternoon. It's these two lines here was highlighting the previous high of the day, which happened in the Asian session. Price sold off, and basically I just took on this second with this very strong bearish candlestick where price pushed up. We've got a very long wick showing selling. It almost engulfed the particular bullish candlestick that was coming up before it. That gave me a trigger to sell, so I sold roughly at the red line here, and then I followed the the trend line down there with a trailing stop, and I took my trade off virtually at this bottom red line here. Didn't quite get down to here, but it's just purely with the whipping up and down. Actually no, I tell a lie, I did take it off at the second line down here. So with the break of this, basically it broke, pulled back, I was out here. So from that we're looking at a trade at 129.38 I exited, and it was the 129.50 that I entered. So 12 points, nothing great, nothing wow, but if you can do that every time you sit down in front of a screen, then it's consistent. You're taking 12 points, and all you do is you then just scale up your position size. You don't have to be constantly looking for the 250 point move that happens, which is, they don't happen all the time. It's not that consistent. These little moves here are the ones that happen all the time as price starts to channel. This channeling effect has taken place because of the massive move that happened on Thursday. Price is now, it's like it's moved a lot. It's now, it's worn out, it's gasping, it's trying to recover. And it finally did recover yesterday evening, and this gives you another opportunity, which says this was at 1900 last night, 7 o'clock. So you can get home from work, you can switch on your platform, you can get yourself a cup of coffee, you can kiss the wife or kiss the husband, and cuddle the kids, etc. Put your feet up and go, right, okay, what's happening in America? Because this is just with the US market now. The Europeans have switched off, and it's only the US market that's trading. And at this point they go, yep, we don't like the euro, we certainly like the US dollar, and we're going to dump the euro. And they start doing that. Now, you could have sat here and taken a short round here because we've got a double top formation, and it's showing that the resistance can't get back up to the previous level. So double top formation, etc. So it's showing weakness there, decline. But the other one is, if you want to sit and wait for confirmation, you've got previous area of support down here. If I take off some of these trend lines, you'll be able to see it a bit better. Bear with me. Right, so if you come back to that, we're looking at the fact that sorry, I'm just going to look for an arrow. You've got an opportunity to sell here, where there's an arrow down there. So with the close of that candlestick here, this bearish candlestick, it's showing it couldn't get up and it couldn't match the previous high. Okay, so it's a double top formation. So especially if you zoom down, we're in we're in the 5 minutes, so that's it. You don't really want to go any lower than that, you're going to get confused. Okay, off that, you've then got very strong confirmation with this big candlestick. On the other hand, if you're slightly concerned about not wanting to take a bad trade, you could sit and wait, and you could wait for the break of this area of support here, which, just to highlight that, the area of support is at this point here. So we need to see this area of support get broken. Okay, so that's there, that line running along there, and it gets broken, and then what happens is price pulls back up into it, creates resistance, and then it falls from there. So that's really, so you've got an opportunity to enter here, but in terms of your trade, you could have entered slightly later at here at the 129.38. Yes, you'd be 8 points later. That's an 8-point move, but however, you're waiting for confirmation that price wants to sell off, and it does then promptly sell off. Okay, the reason for taking the trade earlier, sorry, I'm going to pull back, this is where we are now. The reason for taking the trade earlier is because you've actually got less risk. If you look here, from the highs to where your entry is, that's the risk there. If your entry's here, you've got to take your risk up to the high there, so you've got a bigger area of risk in terms of that. So that's the reason. But as you get better and better, you can take those kind of trades. And that's really it from FountainFX. The purpose of doing these blogs, etc., is to help you build confidence, help you build understanding, prove that anyone can learn how to trade, and if it takes you longer than anyone else, so what? There's a phrase which is, if something's worth doing, it's worth doing badly at first or poorly at first, and that's the case with trading. You have the opportunity to test, to play, to evaluate. You've got demo accounts, etc. You can play around with this market as much as you want until you start to see what you need to see in order to trade profitably. And you can make an income from it. You can just enjoy doing it from a hobby point of view, or you could actually either supplement your income, or if you want to, trade full time and not worry about the stresses of commuting to an office or dealing with a boss that you don't get on with. Okay, so that's really it from FountainFX. Happy trading. We will catch you tomorrow. Bye bye.